All right, everyone, what the heck is going on with the stock market? Let's take a look at the charts, see if we can pick anything out of here, try to figure out where things are heading. So leave me a thumbs up if you find some value. Again, I try to point out where I think the market's heading given the information that I have at the time. And then it's really up to you to manage the risk. So if you're interested in learning a little bit how I manage risk and how I actually, my trading strategy, check out my course. Link is in the description below. Again, it's not all about picking winners. It's about, picking winners, but then managing your risks so that your losers don't wipe you out and your winners can make you some profit. So in reality, if you have good risk management, you don't have to pick as many winners as you do losers, especially when trading short, because when you get a winning short trade, typically you're going to get a lot of gains off a winning short trade in a relatively short period of time. So just something to keep a note of. All right, here's the charts. All right, Qs so far has given us a false breakdown or a bear trap. All right, so here's the chart. This, we could move this up. I had it down here. We could move it up, but in reality, we've got this bearish rising wedge kind of pattern. I think I had it down here actually. Bearish rising wedge pattern. And the main point is the bottom of the trend line. This is coming off the March 2020 lows. You can see we held support here. See the green line? And as we're walking up, we kind of held within here. And then we got a sell signal right here. All right, so that was a sell signal. Looked good at the time. Looked like a breakdown. We have negative divergence. Everything looked good in terms of a breakdown. But we didn't get any follow through. And they've since impulsively bid it back up. So as of right now, it's a false breakdown or a bear trap. I put out a video the other day saying I thought this looked like the top. Again, it's really hard to call the top, but if I don't point out what I'm seeing at the point of time and just say, oh, the trend is your friend, and I'll let you know when the top is in after we've all taken a bath, it's not going to do anybody any good. So that's kind of where it looked like we're at the top. As of right now, I'm not so sure. I'm questioning that, obviously. But we've got Amazon and Google reporting after the bell. So here's the other thing that I think is important to really understand. And I did talk about it in my videos. I said, look, we're really not going to know where the Qs is going to go until after we get the big FANG earnings out of the way. Amazon and Google reporting after the bell. We'll see where things open up on Wednesday, and then look for how the market trades on Wednesday. I think that's going to be an important data point to read into. If we open higher and the buyers step in and bid it up, and we close, higher, you're going to have to just say that's pretty bullish, and we're going to have to, start to position accordingly. So, but if we open higher and sell off or whatever, then we're gonna want to be able to interpret that. So as of right now, we've got this false breakout, this break back within trend. However, if you really look at just today, this is a break back above trend, but it's right before major earnings. About half, I think almost half, or 30% or so of the triple Qs is made up of Google and Amazon, which are reporting after the bell. So to see a big move like this right before earnings, it's either people front running the earnings thinking they're going to be really good. But again, what I'd prefer to do is just keep it kind of light and let's see how earnings come out. And if we sell off after the earnings, that might give us that tell that we need. We still have negative divergence on the daily. So again, we're either going, if we make a new marginal high maybe after earnings and then it fades, then that's a divergent high. So as of right now, bullish, but questioning that. So what I prefer to do is stay relatively neutral. Yes, I have some short positions on, and I'm going to keep those short positions. I'm not going to change much positioning today right before earnings. I'll wait till tomorrow and then change my positioning accordingly. Am I going to get bullish? Likely not. Because here's the other thing, going to the SPY. SPY is just backtesting the trend line. So if I roll out, you can see green trend line coming off the March 2020 lows. We've got lots of resistance in the area that we're at. And so you can see We are, we hit it here, recently tagged it through here, wedged up. This is a much cleaner bearish rising wedge here. And we've broken down and we're just back testing right now. So again, this is not a recovery. This is just a back test in the SPY. It's only in the Qs that we're seeing that recovery. But again, it's right before the major tech earnings. So it makes me question that Qs chart a little bit. And that's why I'm not going to shift positions too much until after that. SPY, obviously, now if Amazon reports good and SPY rips to the upside and we get that daily close higher, then, we have to take that data as we see it. But as of right now, we're back testing, and that's it. We have negative divergence on the daily chart right there, signaling that there is a momentum change. It will be obvious if Amazon comes out and reports bad earnings and you gap down to a big gap down tomorrow. It will be obvious at that point to everyone that the market is breaking down. So again, you have to almost anticipate some of that in advance. As of right now, we're still below resistance. And the blue line up here, which is kind of the blue line I've been basing a lot of my bearish thesis off of, is we're still below that. So this is your 2009 lows. And we had lots of reactions through here. This is a weekly chart, so it's a longer term chart. We had support all through here. You can see the reactions all through here. We had support. So it held, it held this trend line from January of 2016 all the way to October of 2018. So about 2 years, we validated that trend line, and we've been validating that trend line from below ever since as well. So, validating as resistance here, 2019 it was resistance, and 2020, we've ramped all the way up, and we're just slightly below that trend line right here. So what are they going to do? Are they going to ramp it up and run up and do a tag of that? Are they going to break above and do some sort of melt up top move? Nobody knows, but as of right now, we're below that major resistance, and this is a decade-long resistance line, and we're still below it. So that's kind of dual resistance the SPY's at right now. We also have this big impulsive breakdown candle on the weekly, which was a bearish engulfing candle, a sell signal. And we're looking for confirmation. As of this week so far, we don't have confirmation. But again, big tech earnings come out tomorrow or after the bell today, and that has the potential to set up the rest of the week to sell off. Or we could negate this bearish engulfing candle. If you look at the weekly, as of right now, where have we traded up to? Pretty much right up to kind of almost the top of the breakdown candle, this bearish engulfing, but we're still below it. So again, I want to kind of reiterate the fact that even though the market feels very bullish over the last 2 days because we've been ramping higher, this is a weekly chart. We have a weekly breakdown candle. We have not changed that technical posture. Now it could, obviously, but until you change it, you really have to go with the weekly breakdown candle and say, this was a breakdown candle. We have a breakdown. So go with the fact that breakdown still exists is what I would say. That's what I'm choosing. That's my opinion. And so to me, it tells me Amazon and Google are going to miss. The market's going to see it as some sort of a big miss. Who knows why? But that's what the chart. And I know that's going against Amazon is an earnings juggernaut. I understand that. They make a lot of money. They're a powerhouse. It's not so much about the fact that they're not going to make a ton of money. It's just the fact that they're going to make there's something negative. The market's going to pull something negative out of that report. Even if it's not negative, they're going to just say, well, they missed here or whatever, or it's not as good as we thought it would be. And technically it's set up to do that. So that's why I think that's what's going to happen. But again, could get negated. So we'll wait till after earnings. We still have the rest of the week. And if we have that big sell-off after earnings and let's say we close down here on Friday, that's going to be your bearish confirmation that this was a weekly breakdown and we are going to see further selling. Okay, that's kind of what we have. That's the setup. Doesn't mean it's going to play out, but that's the setup in the SPY. The Qs, the Qs looks a little different, but again, the Qs is going to completely change posture right after the tech earnings, after the bell. It's either going to be bullish, or it's going or it's going to be, or it's going to confirm what the SPY chart looks like. So we don't know, but we'll wait till the bell. Okay, the dollar. I've been really focusing on the dollar for probably about a month or so. Let's go back to the hourly chart. And the dollar's starting to break out. This is kind of the sideways trading zone the DXY has been in for a while, and we're starting to break out to the upside. You can see this is a breakout. We don't know if it's going to be a failure. As of right now, it's a breakout. It's not super impulsive yet, but again, it's the dollar, so I think everyone's waiting for the tech earnings, and after that, there's going to be some major position changing. Again, dollar breaking out should be net bearish for the stock market. Higher dollar is not a positive. And here's the dollar futures. You can see here, really, we've been in the sideways range. I just marked up the top of the range right there, and you can see we're well above that, starting to break higher. So what does the dollar look like in the bigger picture? Well, if you go to the daily, you can see, right, we have a bullish falling wedge in the dollar. Okay, we have bullish divergence right there on the daily chart in the dollar, and we broke the bullish falling wedge, consolidated for a few days, and then we're breaking higher. All right, we're starting to kind of break higher there. So to me, it looks like a breakout. We're really breaking, we're breaking this former resistance zone right in here. The day's, not over yet, so we'll see where the day closes, but we're above that kind of 91. It's about 91.10 or 91.08 or somewhere right in there. We're above that. So a daily close above that, and we'll see what happens. Again, we'll see how the tech earnings come out. If the tech comes out poorly, the market starts to sell off. The dollar is going to ramp up to, about 92. And then that's the next level of resistance. We'll see what, we're probably going to get a reaction there where we sell off or pull back. But again, this is setting up for a move all the way up to about 96, 97, 96 and a half if it continues bullish. Okay, gold, kind of the inverse of the dollar, the anti-dollar basically. Gold, you can see here, we're selling off again. Oh, sorry, I'm on Barrett Gold chart. Here's gold, bullion. All right, so again, this is why I just haven't been bullish on gold miners and, even the silver miners yesterday. I told everyone I sold those silver miner stock that I bought because, that just looked like a kind of a impulsive reaction. Didn't look like it was going to really last, and sure enough, it didn't. But here's gold selling off again. So I still think that gold is coming down to undercut these recent lows, down around 1750. So I'm looking for that. We get down to 1750, should be pretty bearish in general. Everyone's going to be bearish gold, and I think that that's going to be our buying opportunity for the next leg higher. Gold's in a bull market. There's your bull market, higher highs, higher lows, uptrending. But, we got ahead of ourselves on this big impulsive rip higher. I sold my gold miners into this rip higher, and I'll be looking to buy them back, likely, depending on how the chart prices out, down here around the 1750. And it continues to look like we're going to get there. Maybe we just drift sideways some more and then just kind of barely dip below there, hit what this trend line looks to be, this upward trend line, this bull market trend line, and then make the next leg higher. I don't know, but that's what it looks like as of right now. Here's silver futures just tanking today, down 10%. Again, just a pop above, but you can see where it closed yesterday. You got to watch this kind of stuff. See how the day ripped higher but then sold off? Pretty much it opened higher and they sold it all day and closed pretty much right there near resistance. Today they're just, it's breaking back down. There's no silver squeeze. That was all just pump, basically. Here's PAAS. You can see they pumped it really all the way up there yesterday. That was a good time to sell. The thing is that my whole silver mining trade that I pointed out was really just a trade based on some sort of mania speculation. I told everyone it was a speculative trade. It wasn't technically based. It was based on the fact that this frenzy was running around to different areas, just buying anything they could at any price, pumping things. So, and I started to hear rumors of silver, and so I thought there could be a play there, and sure enough, that was a play. This thing was up about 25% or so yesterday. But again, it's not technically based. I don't think there's anything that tells me to buy this for kind of a swing trade. So we'll move on. XLF. So far, looks like it's held this support line. But again, big earnings, market moving earnings are coming out after the bell. So we really have to just kind of wait till after the bell to figure out what's going on. Here's XLF though on the chart. Here's your 2011 lows going all the way back right there on the daily chart. And you can see there's your bull market. And we basically we broke that trend there in this recent March 20th drop. Test it from below as resistance. It's held. And then recently we kind of just held there, did a breakout. So as of right now, here's a breakout, coming back in for a back test and holding. So it's bullish today, but again, those market moving earnings are going to change the way they're going to change the way the market looks. So if this can continue to hold tomorrow, then you have to take it for what it is. It's holding support. We could be, moving higher in XLF. Otherwise, we'll see this fail. So that's it on this one. Here's XLK, the technology sector minus Amazon. But again, all the things move together for the most part. And you can see so far this is a bear trap. And, there's your March 2020 lows held. We had a bear trap here and another bear trap there. So 2 bear traps so far. But again, this is right before the major earnings. So we'll move on. Apple doesn't look great, but a couple things. All right, so Apple had a breakout and it failed. All right, so we have a false breakout in Apple. However, there is a trend line. It does look like we have a couple reactions. I think it probably goes it goes to about there. We have reactions, couple reactions here. We got a couple right in there, one there, one there, one there. So several reactions. We got this trend line that so far it's held this trend line. So what I'd be looking for is a breakdown of this trend line. And we'll just call it the lows right there. A daily close below 130.20. And it's likely that Apple's going to start trending to the downside. We don't get that daily close below that, then we're going to continue to trend up. On Apple, we do have negative divergence right there. That remains intact. That has not changed. So there's your negative divergence. So we're looking for a trend reversal because the negative divergence tells us it's coming, and we just need to see that breakdown in the candle. All right, so let's look at Amazon. Amazon basically, so we've got, this is kind of a trend line. We've got a couple reactions. You can see there's 3 basically, but we've got a reaction high here, reaction right here, and then a reaction cluster right in here, and we're breaking out. But again, this is a breakout right before earnings. To me, that's very suspect. It looks completely like a fake out. Could be people trying to front run earnings and Amazon's going to knock it out of the park and they want to get ahead of that. That's possible, but this is very risky to take a position right before earnings like this. So I would personally, I'd rather wait till after the earnings and then see what this does. I would say there's a high probability that this fails, that this breakout here fails. We do have a topping pattern, a head and shoulders topping pattern that still remains. We could void that if we get continued upside. And we do have negative divergence on the RSI and the PPO. So we have clean negative divergence on the daily chart. We have a breakout. This is a breakout that's happening with negative divergence right before earnings. It's just very suspect. It can hold, of course, but I think there's a pretty high probability that this does fail. That's just my take on it. So we'll wait and see what happens on that one. Let's look at Google. They report. So Google is making a bearish rising wedge. Here's a bearish rising wedge pattern. That's what that is. We have negative divergence on the PPO, and we have negative divergence on the RSI on the daily chart. So negative technical posture, negative momentum basically, positive bullish price action, and a negative bearish pattern. To me, this looks like it's likely going to break down as well. But we have to wait and see. And again, what I've been seeing a lot lately with these bearish patterns is they break it to the upside, run, for just a couple days, and then it fails. So we could see that. We'll just wait and see what happens. If it breaks to the upside, it's obviously a breakout, but then you look for that failure. If we don't get that failure and everything, all the other things look good and everything's kind of rolling, then this could just be a breakout and we could just continue higher in Google. Energy here doesn't look like there's anything really changed in XLE's posture. We're having a little bit of a rally today, but again, we're still kind of holding within this downward trend. So I still think we're heading at least down to this 37.65. There's some support there. We break that, we're going to head most likely down to 34.28. We also have the 200-day moving average, which is sitting there at 36.50. So we could break below this area, hit the 200, and then hold support. That's completely possible. We'll look for signs of that. Nike getting a little bit of a rally today, but again, Nike has this clean and clear bearish rising wedge pattern on the daily chart that was broken. So we broke down, we back tested. This is how downtrends work. You break down, you do a back test, you break down further, you get a kickback rally, you continue to break down, you rally. It doesn't just completely collapse. So it's pretty normal to see this rally. I think, and rallies in a downtrend give you an opportunity to either take a starting short position or add to one, whatever. But still downtrending. So I think we're likely to continue down. Where are we going? Well, I think we're heading down to 100, about 99, $100. It's just, gonna work its way down there. Nothing's really technically changed. We're kind of at resistance right here, which is about 138.68. Looking at the hourly, this is where it held support before. Tagged it there. Then when it broke, it was impulsive. See the impulsive breakdown? So that's your resistance. We've overshot it just briefly. This looks like where we're going to fail. So I like this spot for adding to shorts or establishing new ones. Likely we won't know until after the earnings today where this thing's going to go. But I think this looks like the spot where, because here's the thing. This is a break above resistance, but it's not impulsive. See how we've just barely been creeping up here and we're starting to sell back off and just dance around this level? I think it's very probable that it's going to fail into the close. PayPal broke down. You had a sell signal in PayPal. If we go to the daily, there's a sell signal. Broke down, then gap down, so further confirmation. So there's your sell signal. We're running up for a kickback rally. So it should fail up in this area, and then we're going to, continue to work our way lower. But this looks like a kickback rally. That's all it looks like. And I suspect we'll have some lower prices in this thing tomorrow, is what I'm thinking. Now, if they recover this trend line and ramp it higher and start to hold up there, then we've got a false breakdown or a bear trap. But as of right now, we're just running right up to resistance. And then, when you've broken trend lines and you have sell signals, it becomes a sell the rip market. So here's a rip and you look to sell into that rip. You either, if you're long, you take profit, or if you're looking to get short, you establish positions. And that's what this looks like. It's a sell the rip market in this chart or this stock. Until that changes and when you recover the support, then it can become buy the dip. But as of right now, this looks like sell the rip. Moving on, and you got negative divergence on the daily chart, on the PPO. And that's the thing. Usually the best position and the best time to enter or add to a short is when things look the most bullish. So a lot of people just follow price and they feel like, oh, everything's great because price is up, but they don't see the technical setup for the prices to move, where the move is going to be in the future. Yes, the move is up right now. To me, it looks like we're going to either run up and hit this resistance or not quite get there. And the future move is going to be a down move down here. Everyone will be bearish and start to get bearish as we start to move lower and say, oh, everything's going down. You were right, blah, blah, blah. Or I could be wrong. And we could obviously recover. I'll hear about it. But as of right now, I look to get positioned for the next move that the chart tells me is down. Look at these former momentum names like Chewy and Peloton. These were just ripping higher, and it's just almost flat today. So you know, again, you had a breakdown. There's your sell signal. We're kind of flagging out. This looks like it's bear flagging. And it's, you know, you've got a break of something like, we'll call it this. And then you've got this flag looking thing, which is maybe right about there. This isn't perfect. It's just, I'm just trying to give everyone an idea of, and then you maybe get the breakdown, something like that. So yeah, to me, it looks like we're heading down to about 118.40 on the next impulsive leg down. And yeah, that's what this looks like it wants to do. Chewy, same thing. Now Chewy hasn't broken. It's, you know, you've got this support line here in Chewy on the daily chart. We haven't broken that. So we broke this recent one and we're kind of flagging. This could go either way. I started shorting this, but I got out of it when the Wall Street bet thing was going on, because that the co-founder of this was involved, and I just didn't like the headline risk that was potentially there. So I got out of this Chewy one. The co-founder of Chewy was involved in that. So I decided to just, you know, I don't have to be short everything. I got certain things that look better without the headline risk. Etsy. All right, so resistance is right now sitting at about 213.92. Call it 214. We're running right up to it. So far, we're getting rejected off that. And, you know, that should hold. It doesn't have to, but it should. Looking at the daily chart, here's your trend on the daily. We broke trend, did the back test, and put in the negative divergence right up in here. So this price action up in here was a divergent high, which has a high probability of failing. And if you look at this, we had a breakdown candle. So here you got an outside day engulfing with confirmation. All right, that is a sell signal. And we're getting a kickback rally. This is where it should fail, is so far where it has failed, up here at 214. Now I look for lower prices. Qualcomm. Okay, so Qualcomm's going to go the way of the fangs. It's really heavily tied to Apple, so it's just pretty much goes the same direction. As of right now, you can see what we have going on. We had on the daily chart, nice clean uptrend channel right here. Just this nice channel of upward price momentum. We put in negative divergence, right? We really started to get it back here. So this really was your first clue on the PPO that we had divergence. Didn't quite have it in the RSI. We really started to get it on both about right in here. So this is your divergent high area, is all right in here. All right. That's where we started to get negative divergence, signaling that we were likely going to see a trend reversal. Obviously, then you wait for the break of trend, which we did get. So here's your break of trend, impulsive, breakdown, sell signal. And so far, running up to do a back test. You can see the daily, look at the hourly and how they try to, you know, trick you basically. So far, look at where they popped it all the way back above support, came back down, and we're just dancing along that trend line basically. So it's not a recovery. It is literally a back test. And I assume it's going to break down and fail at this back test. I added to my short position here. Not a lot, but add a little bit as you get there. Now, tomorrow, this thing will, you know, I'll either be wrong and we'll get a big gap up and it'll recover, or it's going to gap down or sell off with the tech earnings that are coming after the bell. So the negative divergence in this thing tells me that we're likely going to break down, but we have to wait. So again, they're just going to keep everyone guessing. That's what the market loves to do. Zillow Group ramping up for a back test into the major tech earnings. Nothing's technically changed here. We had this uptrend line here. We broke impulsively. There's your sell signal with confirmation. See the 2 selling days? So that's a sell signal with confirmation. That's really as good as it gets. Now we're getting a kickback rally. I think this rally fails. Neo's continuing to look weak. Neo's most likely heading down to this trend line. It'll probably if the market gaps down, Neo's probably going to gap down right at this trend line. That's where the dip buyers are likely going to step in, right there at trend line support. Could gap below it though, so we have to watch that. But as of right now, it really looks like it's pointed down to that trend line. Negative divergence across the board in the PPO and the RSI. Hasn't broken the major trend though, which would be down here at about 47. So we're going to look for how this thing's going to behave when it gets down to that trend line. Tesla, they're ramping this thing higher, but again, this one's likely going to trade with the fangs as well. This one could trade differently though. So this is a bubble stock. This is a mania stock. This can do anything it wants. So, you know, this one is more for me kind of a valuation play, higher risk, because obviously I don't know when this bubble is going to end. Or when this thing's going to, you know, stop going down. They could ramp this thing all the way up to 1,000, which to me I think is completely possible, and not that far away, about a 10-11% higher. I'll probably be adding to a short position up around that $1,000 mark. If it gets up there, you can see this is the trend line that's been walking up, broke trend, and it hasn't really fully backtested that trend. So a ramp all the way up to about 1,000 or so, and to back test that trend line from resistance, it's completely possible and you know, kind of probable as well. And this copper miner SCCO still looks good. Looks like we got a, you know, you got a breakdown right here and a confirmation sell signal, and they're just trading sideways, waiting for the market to determine what it wants to do. We have broken down, so I think we continue lower. We have negative divergence. I'm looking for lower prices on this one. First stop likely to be 58.78. That's probably, if we get that gap down or a big move tomorrow, we're probably getting down there probably tomorrow. And that's about it, guys. You know, look for volatility to spike. And if you get the breakdown, the dollar's moving higher. The market hasn't caught on yet. Doesn't mean it's going to. The dollar could fail. It could be a false breakout in the dollar. Volatility is coming down a little bit. This is the point in time, you know, this is the counter move where I think if you're going to see a breakdown, you're going to see volatility spike higher. So potential to add to volatility longs here, while this kind of stuff catches everyone off guard. Oh, everything's over. There was no bad news. We're fine. Oh, and then then you get the breakdown and the market says, oh, we're not fine. And that's likely when you're going to see this big impulsive move up in volatility. Again, that depends on how the market reads these earnings and what it wants to do tomorrow. We could obviously come all the way back down to this 1034 and potentially even break down from there. If we're going to go lower and the market wants to go higher volatility, then this is going to be a false breakout, and that's pretty bearish. You're likely to break the support line at this point in time. What else? What's the last one? Citibank. Let's look at that. So far, we've still broken down. We're still below the 2011 bull market trend line right there. See all the support. We're kind of, we're still below it. See it right there. It's just walking up. Broke above it. So far, it's been a false breakout, and we're just below it. Just kind of consolidating a little bit. As of right now, I think we still head lower down to 53.60 is the next stop. And nothing's really changed as of yet. Tomorrow's going to change how the charts look. And, these trades that I pointed out are either going to be wrong or right. So if you're not sure, keep it light. Wait till tomorrow. There's nothing wrong with that. And then we'll get back at it tomorrow after the earnings. So thanks, everyone. Catch you on the next one. Bye.